back. You're watching Markets at Noon, and up next is SAMIL, and let's talk about their Q3 numbers, where definitely profits and margins are seen expanding. But then, what's the demand trend across segments, and how is Q4 really looking? Let's talk with the management. We have Mr. Pankaj Mittal who's a whole-time director and president, and also Gandharv Tongia, who's the group CFO, SAMIL. Hi, afternoon. Welcome both of you. Gandharv, I'll come to you first. Profits have seen rising, it's close to 9% year on year this quarter. How are you reading the overall demand environment across auto and non-auto segments going forward?
No, I'm so happy to share with you that in the history of the company, this was the best ever quarterly top line performance. This is a true reflection of our demo capabilities. Both auto and non-auto business have registered fair amount of growth. As a number of, it was almost close to 31,400 crore rupees of top line. On your question of outlook, last year we had announced our 5-year vision, wherein we want to achieve a top line of $108 billion, which will come from all the businesses, auto and non-auto. And directionally, we want to achieve and beat 40% growth. Generally in our business, second half of the year is completely better than the first half. That is what we have witnessed in the third quarter, and the coming quarters, we expect the similar trend or perhaps a better trend will continue, provided all other things remain the same.
Okay, Gandharv, so point taken. But Pankaj, coming to you now, with the India-EU FTA sealed and the US tariff relief has also been announced, how meaningful could this impact be on Motherson's revenues and profitability over the medium term and also your overall international business?
Well, we see the FTAs as a very positive development because both the FTAs, be it with the European Union or with the USA, are very positive to the business. It will lead to a bilateral flow of products. So more and more flow to the European Union. It will help the European car industry as well as the Indian component industry. And we will have more and more seamless integration with the European Union in terms of doing business. Also on the USA front, it will be very positive because again, whether the products which we are importing or exporting or supplying even in Americas, they will all get much more common elements. Having said that, Motherson so far has always followed a policy of being local at our global locations. So we do supply our products locally in European Union, close to our car makers plant. And similarly in the North American region, also we have been supporting the customers either from USA or Mexico. So most of our products have been USMCA compliant, leading to very little or no impact on our margins.
Okay, and Gandharv, coming back to you, raw material costs impacted margins in Q3, particularly in select businesses. Could you quantify that impact for us and explain the typical lag in passing these costs on to customers? What could be the timeline here?
So in our businesses, generally input cost movement are passed to the end customer. One of the business, wiring harness, got impacted because of increase in copper prices in the last quarter, and because of which there was some softness in the EBITDA margin of this particular business. We expect that this increase in price we will be able to pass on to the end customer in the subsequent quarter. Having said that, the other businesses have registered a fair amount of improvement in margins. I would like to draw your attention to another business, which is emerging business, wherein we have sunrise businesses like aerospace, as well as consumer electronics, which have registered a fair amount of growth. For example, aero business has registered growth of 41%. So in the coming quarters, as I mentioned a while back, we expect the margin trajectory would continue to be positive, provided there are no other macro or other negative developments.
All right, Pankaj, from you, margins have seen some pressure this quarter. As you look ahead, do you see room for a margin recovery, and what would be the key drivers for that improvement?
See, Motherson has always followed a policy of working towards ROCE improvements. And we have a stated policy that we will strive to go for 40% ROCE in our 5-year plan, and for a top line of about $108 billion. As of now, if we look into the medium-term future, we see a lot of positive developments. as Gandharv mentioned about growth in the emerging businesses, it's growing at a very fast pace. The FTAs also will help in fueling that growth, especially on the aerospace side as well. We, with our very consistent approach in building Motherson into a design, engineering, manufacturing, assembly, and logistics competent company, has built capabilities that all kinds of customers from different industries work with us today, not just one industry. So it's a very good future. And even in the automotive side, we see a very good market. We see that the forecast for the next year is that the total volumes of the cars would be touching about 93 million vehicles. So we see a very consistent, stable markets growing at a good pace in the coming period, and our growth being fueled both by emerging markets as well as more and more opportunities in terms of acquisitions. Because of a lot of issues around the markets, there are so many acquisition opportunities which have been available. We can continuously evaluate them and pick up the right ones with the help of our customers and to support them.
Gandharv, just to know from you, in Q2, EVs accounted for around 22% of your automotive order book. Where does that contribution stands now, especially as several OEMs are reassessing their EV strategies?
So in general, as Pankaj sir mentioned, that the overall growth trajectory is positive. He mentioned about the improvement in number of vehicles which are getting manufactured. The passenger vehicles market is expected to be around 93 million. We are, in a way agnostic, whether it's EV or hybrid or otherwise. We supply to all types of vehicles. And even if there is a change, we don't expect any material impact on our performance. We will continue to strive for achieving 108 billion top line by 2030. And as Pankaj sir mentioned, the double capabilities, design, engineering, manufacturing, assembly, and logistics would help us in achieving our ambition by 2030.
Okay, on that note, Pankaj and Gandharv, thank you so much for taking the time out and speaking with us. Our viewers, that was the management of Samvardhana Motherson or SAMIL as we now know it, joining us to decode their very strong quarter that they've seen in Q3. On that note, we'll wind up this edition of Markets at Noon, just taking a look at what the market is doing. 25,937 is where the Nifty is at. Yes, absolutely flat and slightly off the day's highest point. But on that note, it's a goodbye from Kavita, me and the team that put this show together. But stay tuned to ET now, because all about your company takes all the action.